Are you in position to see my screen?
Yes.
Question 2, we are told that on the required part A, we are told to advise with suitable computations and in accordance with the relevant financial reporting standard. We advise management on which of the above divisions would qualify as a reportable segment, and the disclosures required in the financial statements are at 30th June 2022. So, what are we given? We are told that DIL is an insurance that deals in the general life and the asset management insurance businesses and owns an insurance training unit. The insurance businesses and the insurance training unit have been separated as divisions. These divisions generate their own revenue and incur expenses. This is something to note, especially when you're handling this standard. They are reviewed separately by management from a decision-making perspective. Okay, separate financial information is available for each division. Also, this is something you need to note when you're dealing with this standard. Okay. Okay, they are telling us that as a result of DIL's success in the last 5 years, the directors decided to list the company on the Uganda Stock Exchange in the coming months. In a bid to comply with the rigorous reporting requirements for listed companies, the company appointed you as its senior finance officer effective 1st October 2021. You have been provided with the following information as extracted from the financial statements. Okay, so here we are just advising. We are not writing a report. So it's just here you're trying to advise. So you have different divisions. You have general life, asset management, training. And each division you are given revenue, you are given profit or loss, you are given assets and liabilities. So how can you start? This is a question 2 number. You need to write something about the standard. So we are going to say that, let's write something and we say IFRS 8, that is operating segment, defines an operating segment as a component of an entity, that engages in business activities, from which it earns the revenues and incurs expenses. Okay, remember you can even list, you can say IFRS 8 operating segment, define an operating segment as a component of an entity that, then you start number 1, that engages in business activities from which it earns revenue and incurs expenses. Then number 2, whose operating results are regularly reviewed by the entity's chief operating decision maker. That is number 2, to make the decisions about the resources to be allocated. the segment. That is number 2. That component of an entity, they are saying that IFRS 8 defines an operating segment as a component of an entity whose operating results are regularly reviewed by the entity's chief operating decision maker to make decisions about resources to be allocated to the segment. If you find that you have a segment or a division that is not regularly reviewed by the entity's chief operating decision maker, then that cannot be an operating segment. Then lastly, we say that you can say and assess. Okay, so this is a continuation, and assess its performance. You are reviewing this segment or this division to allocate resources and also to see how that segment is performing. You as chief operating decision maker, that is the reason why you need to review this segment, because you need to allocate the resources, maybe workers, money, mention them, and also review how it is performing. Okay. Then finally, we can say, and for which discrete financial information is available. If I want information about that segment, can I easily get that information? If I want to know the revenue from that segment, can I easily get? If I want to know the assets allocated to that segment, can I easily get? Okay, that is all about operating. That is all about operating segment. Now, after knowing the operating segment, we want to know which one qualifies as a reportable segment. Okay, we want to know from your segments which one can qualify to be a reportable segment. So we are also going to write something, another paragraph. You can say that IFRS 8 states that a division of an entity qualifies as a reportable segment if it meets any of the following quantitative. Here you are going to say quantitative, any of the following quantitative criteria. Quantitative criteria. One, its revenue. If its revenue is 10% or more of the combined revenue of all division. That is number 1. If you realize that division contributes 10% or more of the combined revenue, then that one qualifies to be a reportable segment. Then number 2, if its assets are 10% or more of the combined assets of all operating divisions. That is number 2. Then number 3, the last one, if it's reported absolute profit or loss is 10% or more of the greater of the absolute profit or loss for all divisions. So those are three conditions, and if let's say if a division meets one criteria, it will qualify as a reportable segment. You don't need it to meet all the criteria. So here, then we are going to say that therefore, remember when you put therefore, now you're switching to the question, okay? You are switching to the question you want now to answer, to tell this management which one qualifies as a reportable segment. But remember, you cannot advise minus computing. You need it to compute. You need it to compute. It means that you need to. It means that here you need to really look at each criteria separate. Look at each criteria separate. So you are going to start with the. You are going to start with the revenue. Look at assets. Also look at absolute. Look at absolute. So we are going to start with revenue criteria. Revenue criteria. And when you're testing this, you need it first to know. Remember here, you're saying that if its revenue is 10% division. So it means that looks like I'm breaking. I don't know whether you're hearing me. So it means that here we need combined revenue. First, before you get 10%, obviously you need the combined revenue. How do you get the combined revenue? You're going to sum up. You're going to sum up. From your question, do you have total revenue? Good thing here, colleagues, you see that here we are given total revenue direct. So this is good. Sometimes you'll find that this total revenue is not given, so you have to add. You have to get this plus this plus this plus this to get total revenue. So here we are given total or the combined revenue. This is in a million. Then out of this combined revenue, you can test and see. You can test the 10%. From this, you can say therefore, you can say 10% or the threshold. The threshold is equal to 10% times the combined revenue. Times the combined revenue. And how much do you get? This is 10% times 26902 million. How much do you get? This is shillings. Those with the calculator. 10% times this. Is million. Okay. Then from this, if you want to know which one qualifies as a reportable segment, But colleagues, are you following?
Yes, we are
Yes.
following.
Okay, so from this, if you want to know which one qualifies as a reportable segment using this criteria, you are going to go back. You're going to go back at your question and see, compare, looking at your amount, 2929, is it 2902? This is your amount. This is your revenue. So any division that has a revenue which is above 29, then that one qualifies as a reportable segment. Okay. But now in an exam, you don't need to keep on. You can first do all the workings, first set the threshold for all criteria, then you advise at the end. Okay. So let me also look at it. Okay, if at all I was to advise using only the revenue criteria, you see that we have 2690. Okay, so if at all I was advised basing on this one qualifies, this one does not qualify, this one also qualifies. Does this one qualify? No, because this is below the threshold. So it means that with revenue criteria, your division that can qualify as a reportable segment, it's general division and the asset management division. Life and training divisions do not qualify basing on the revenue criteria. But you may find that life and training divisions qualify when you apply other criteria. So let's first also look at we are going to give the conclusion at the end. Let me say here we have what? Here we have asset criteria. Using the asset criteria, you need the combined. Remember here, you need the combined assets. So what is the combined assets? You add, are you given a combined assets? This is shillings. Let me see. Assets for all the divisions. It's this one. And this figure is in the. So from this, the threshold here, the threshold is 10% times the combined assets. Look at 10% times 27274 million. How much do you get? This is shillings. 10% times this. But it's good to avoid the rounding off. Colleagues, it's good to avoid when you're handling this number, it's good to avoid rounding off. Especially when it comes to the threshold. Okay, then from this, if at all you were to just simply advise basing on the asset criteria, you come back at your question and see which division is above this. So finally, you can look at what else do we need? The absolute. Now for this criteria, for the last one, it's something you need to pay here. You need to pay attention. You need to pay attention here because people make mistake. This is the absolute profit or loss parameter, or you can say criteria. So here, what are you going to do? You are going to look at, remember there is this word absolute. So here, you are going to look at the greater. There is this word, the greater of the absolute profit or loss for all divisions. So it means that you need to look at the absolute profit, absolute profit. You look at profit separately. Also, you look at the absolute loss separate. When we say absolute, it means that here the signs does not matter. The sign does not matter here. You just copy the figure the way it is. Okay. Now go back to your profit or loss. Pick the profit separately. Also pick the losses separately. You aggregate. So we are going with absolute profit. We are going to get 1,091. Then we add 1,000. 1,000 what? 1,833. So with the profit, we are going to get this. Then we add, this is in a million, then we add 1,833 million. What do you get? You do the same for losses. For loss, you add the losses separately. This is 33. This is 322 million plus 71 million. What do you get? This is 1091 plus 1833. Then here it's 322 plus 71. So all these figures are in millions. So from this, choose the greater. Choose the as before you determine the threshold, choose the greater from these two. Choose the greater. Which one is greater? I will choose the greater. And here the greater is what? The greater is, okay, the greater is absolute profit. So you will rely on the absolute profit to determine the what? You will rely on the absolute profit to determine the threshold. This one will be our base, okay? So it means that the threshold will be equal to 10% times the absolute profit, because that one is, it's the one that is greater, which is equal to 10% times 2,924 million. What do you get? This is shillings. 10% times this. And your answer is in million. So that is your threshold. That is your threshold. Any segment that is below this, any segment that is below this is not a reportable segment. Okay. So colleagues, this is shortcut. This is shortcut. This is the shortcut that you can use. Remember, we have another method, but I don't want to talk about that method because that method takes a lot of time. This is a shortcut. You can use this shortcut. Another method is where you're basing on percentages. Instead of relying on the threshold in terms of amounts, you find that you're relying on the what? On the percentages. That one takes a lot of time. Okay, so we want to advise now. We want to advise. We want to advise. So advise. Some people, all this can be part of your appendix like this. Sometimes this is good to put these ones in our appendix. Then advice comes here, like here. After writing this, then you advise, but this one will be in your appendix. So advice, remember, we want to tell which one from our divisions, which one qualifies as reportable segment. So it's good to analyze. It's good to analyze each division separately. If you're talking about, let's say, if you're talking about general division, does general division qualify under revenue criteria? Does it qualify under profit or loss? Does it qualify under asset criteria? You first pick those divisions or those segments that qualify with all criteria. You first identify those segments or those divisions. Okay. So when you observe basing on the revenue criteria or parameter, we said that the general and asset qualify. It means that general division qualifies under revenue criteria. Does it qualify under revenue under profit or loss parameter? Does it qualify? So when you observe from our question, actually, because these are our thresholds, so you just look, you observe, does general division qualify under all criteria? You can start with that. Yeah? Okay, I'm going to write, when you observe our general and asset management divisions qualify as reportable segments and all the three quantitative parameters. So when you observe, general and asset management divisions qualify as reportable segment under all three quantitative parameters. Also, you're going to say that another division, like you talk about each division separately. Life division qualifies as a reportable segment under the absolute profit or loss parameter, even if it fails even if it fails to meet the criteria, even if it fails to meet the criteria under the asset, under the asset and the revenue parameter. So when you observe your life division, remember with absolute profit or loss parameter, our threshold is this one. When you go back at your computation, you see that under profit or loss, your life division is 322. That this figure is above the threshold. This figure is above the threshold. Don't look at the sign, colleagues, here. Don't look at the sign, okay? Don't. This one will not qualify because it's below the threshold. It's below the absolute profit threshold, okay? Then from that, I think we are left with what? We are left with training. Training has not yet qualified. Let's see training. When you see training, I think, okay, training, you're going to say that training division does not qualify as a reportable segment because fails to meet at least one of the quantitative parameters of revenue, assets, and the absolute profit or loss. And that's all. Okay. You have advised the management on which division qualifies. Remember, if a division qualifies under one parameter, that is enough. That's enough. But don't use one parameter and you say that that's all. No, you need to look at all the parameters, the revenue, asset, and absolute profit or loss. Okay. However, you are also going to write. You're also going to write and say that IFRS. Yes, please.
Yes, just some clarification. Maybe I missed this parameter for liabilities. We don't look at it. It's not part of the standard.
No. That one is not part. It's not part of the standard.
Oh, okay. Can proceed.
Okay. Maybe another thing you can talk about here is you may bring in figures like as you advise. Maybe when you say general and asset management divisions qualify as a reportable segment under all the three quantitative parameters since they are above the threshold. As you advise, you may bring in the figures, but ideally when you have done this, examiner is aware because here you're looking at the threshold. You're looking at the threshold. Some people you can put figures as you advise. You can fix in figures to clearly show that maybe if you're talking about the assets for general division, you bring in the value. What is the asset value? What is the asset value? You can bring the figure there. But That one is not all that. That one is not. What I'm saying, maybe if you want another person, let me, before I talk about, you can say that like now you can say that general and asset management divisions qualify as reportable segments because they are you bring now the value. They are assets, general and the asset management qualify as reportable segment because they are assets. We start with revenue, assets, and absolute profit or loss. That is now you bring the figure, that is shillings. Now you bring the figure. What is the revenue? What is the revenue for? Assets qualify as because they are revenue, assets, and absolute profit. But I think this one, it's just confuse ourselves. Let's just go with the first one. If you want to bring the values, maybe you look at each parameter separately. You first leave like this one. It's a wastage of time to me. It's a wastage of time. Let's just continue. It's a wastage of time. Or you can talk about
We'll continue.
general and we just continue. This is enough, eh?
That is enough. Yes, because
Okay.
remember, next exam, we don't have a lot of time to write all that English.
Okay. Okay. But there is a key paragraph that you must bring in. This standard highlights another key element. After writing this, okay, you're going also to write another paragraph and say that IFRS 8 requires that the total external revenue reported by the identified reportable segments be more than 75% of the entity's total revenue. The entity's total revenue. Otherwise, additional operating segments must be identified as reportable segments, even if they do not meet the quantitative thresholds above. Okay, this is something that you must bring in an exam. If the total external revenue of the identified reportable segment is below is below 75%, then the remaining segments should be aggregated and reported as single segment. Here what I'm writing is that, okay, we are saying that IFRS 8 require that the total external revenue reported by the identified reportable segment be more than 75% of the entity's total revenue. If not, if you find that it's not above 75%, then additional operating segment must be identified as reportable segments, even if they do not meet the quantitative threshold above. It means that you are going to the remaining segments, you just aggregate them and report those segments as single segment, okay? But for this case, in this scenario, the revenue provided is not classified as internal and external revenue. Hence, the 75% condition cannot be applied or cannot be evaluated. Since in our question, the examiner didn't classify the revenue as internal and external, there is no way you are going to apply this condition. Okay, remember internal revenue, when we are talking about internal revenue is generated from selling goods or services to group members. Maybe your group members could be these divisions. You have these divisions in different locations. It could also be in one location, but you allocate, you sell to each. Okay, so in that way, you'll find that you have internal revenue. How much are you generating from selling goods and services to group members? Then external revenue that is generated from selling your goods or services to third parties. Okay, could be customers who are not related to the group. So if examiner wants you to test this, find that he's giving you the external revenue and the internal revenue. Internal revenue here, as you get the revenue, as you get the combined revenue, you aggregate still the internal revenue and the external revenue. To highlight more about this condition, if at all we had external and internal, how would you test? You first get the total. You first get the total external revenue. You get the figure, then also get the total revenue of all segments. Remember, this total external revenue is the total external revenue for the identified reportable segments. Here, only for identified reportable segments. Only that. But here, you are looking at all the segments, whether it's a reportable or not. Okay. Then once you have, if let's say here the figure is 960 million, and the figure here for all is 129. Let me say 1290. how do you test? You're going to get 960 million, then you divide by this, you divide by 1,290. Then the answer you get, you multiply by 100. So we get this divided by 1,290, and the answer we get, we put this one as a percentage. Try to avoid rounding off. Try to avoid rounding off. Okay, so the question is this one above 75%? No. Now, if you realize that this percentage is not above 75%, then other segments that you said are not reportable segments, you are going to aggregate, you bundle, bundle the remaining, bundle the remaining segments. Now the remaining segments could be here. We only have one training division, but you may find that you have more than one. Bundle the remaining segments and report them. It could be A, B, and C. And report them as one segment. You report them. You put like others, where you have others. That's where you put these. Others would comprise of A, B, and C. And the reason why you want to report this is because ideally you're telling the user that however much individually they don't meet the criteria, but when you bundle them, they matter a lot. They matter a lot. Okay. It's like here you're telling them that part of this, you have left 25%. You have left more than 25% without disclosing it. That figure is so much, is a bit significant. It's a bit significant. And when you observe some companies, normally say like banks, you find that they aggregate some things. You find you have salaries and wages, interest expenses, and other expenses. They report, they aggregate and put everything and as like other expenses or other incomes. Okay. Remember, if it is a reportable segment, you report everything about what? About that division or about that segment. Any question? So colleagues, if you meet a question with external, don't, even if it is this question, you have to go ahead and tell the examiner this. Don't just stop here. Don't just stop here. You have to go ahead and bring this. However, you conclude and say that in this scenario, in this question, the revenue provided is not classified as internal and external revenue. And for that matter, that 75% condition will not be applied. Okay. Remember, we are still on this question. Okay. Next part of the question. Now you have advised the management on which of the above divisions would qualify as reportable segment. They are telling you go ahead and state the disclosures. The disclosures required in the financial statement. Okay. For disclosures, you can write like what you know you want to. Okay, you can say that an entity, here you know the name of an entity, okay? But you can say an entity should disclose the following. Or you can say IFRS 8 requires an entity to disclose the following. One, you are going to tell the users the judgments, can say the judgments used by management in aggregating operating segments. Especially if you have applied this, 75% condition. If you have applied that 75% condition, then you must bring this disclosure. Okay. Then number 2, you can also bring, tell us the basis. Tell us the basis for determining the reportable segment. You based on what? Okay. The users want to know, did you base on revenue? Did you base on asset? Did you base on profit or loss? Okay. So you need to tell us the basis for determining the reportable. So that is whether asset, whether revenue, assets or profit or loss parameter. Okay, you must indicate which one did you use. Okay, then number 3, you can disclose the asset, the profits, the losses, the assets, the revenue, the liabilities, etc. for all segments identified as reportable segments. Then next, you can talk about you can tell us the information about the transactions with the major customers. It's also a disclosure. The transactions you made with major customers. Remember here there is revenue criteria, so we want to know who are your majority customers. Then maybe you can number 5. Remember in an exam you just write what you know. You can put 2 or 3 or 4 depending on what you know. You can also bring the reconciliation of your assets, your revenue, your liabilities, etc. of all segments identified as reportable. You need to reconcile at the start and at the end. How did you arrive at the revenue, or how did you arrive at the total assets or the total revenue at the end? How did you arrive at that? You need to show us the reconciliation, okay? From the start to the end. I think that's enough. I think that's enough. Now, another maybe what they can ask you here, conditions of aggregating. This is not part of the question, but it can be asked. Conditions of aggregating operating segments. Colleagues, we have said that in a situation where you have external revenue and internal revenue, you test this, and at the end, you can report those other segments as a single reportable segment, but you cannot aggregate them. You cannot aggregate them when they don't, when these conditions are not met. Okay, so we are going to say that an entity should aggregate segments if you can say that these ones are reported as single reportable segment if they meet these conditions. One, they have similar production techniques. The methods you use to produce the product in those divisions or in your segments are the same. But if you find that you apply different techniques on every division, on every segment, then that one you cannot aggregate. Then number two, you look at their customers, their products. Okay, let me say their products. Let me talk about the product. Their products or services are similar in nature. You can let's say aggregate if you're talking about newspapers, you can aggregate all newspapers as one set. The professional course look at they can aggregate a CCA, CPA, okay, and they report that as a single segment. Because ACCA, CPA could be all those could be categorized as professional courses. Talk about the soft drinks. Okay, so here you can also say they have similar delivery channels. If they have similar delivery channels, then that one you can aggregate. Then maybe they serve similar customers. Then okay, they have So if they ask you conditions, please, you can put that. Let's try to talk about the criticism. You can say one. Then you can also look at the segment determination. The responsibility of directors. And this is highly subjective. Okay, IFRS 8 advocates for the use of management approach. Identify the operating segments, which is too much to the discretion reporting. Management. The management may report segments which are not consistent for internal reporting and control purposes. Making its usefulness questionable. The use of management, I think. Okay, we have talked about management approach. Okay, the use of management approach implies that financial statements of different entities are not comparable. Now, remember when you use your approach, this is not a reporting approach like you have as a standard. You have not really specified that every company. Remember, every company can decide. I can use the asset parameter. I can use the revenue parameter. And because of different parameters being used in this scenario, it's hard to compare. It's hard to compare the results for different companies. So yet this one will not be comparable due to the different accounting policies. From entity. Each entity one entity may choose to use asset parameter, the other entity may choose to use the revenue parameter. And because of that, it becomes very hard to compare the results. But you can search more. You can search more about the criticism, but I believe if you can recall like 2 or 3, then that will be okay. So that's all about the standard. That's all about the standard colleagues. I believe if you meet a number, you can pass. Okay.